I think this time what emerges from this cloud of crap is going to be Bitcoin and a very small handful of solid projects that will probably perform for the next few years. I think retail is finally tapped out of meme-like investing.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
Hey, nice to see you too.
Welcome everyone to another 1000X. I'm pretty happy today because the market's down 3%, both NASDAQ and S&P, but gold is up 3%. And that means my portfolio is doing pretty well, and Bitcoin's up, which means that my portfolio is doing even better. You know, things are kind of heating up. I mean, this is one of those scary moments for people that hold equities, where equities are just slowly grinding down, they're melting lower, but the market is acting kind of how you would expect it to, right? So there are two types of equity sell-offs. There's the everything sell-off, where people are just deleveraging their book. And in that world, you just open up your trading view and you're like, holy shit, why is literally everything red? And then there's this kind of sell-off where there are things that are up and equities are down, which just means that there's reallocation happening, which is much scarier than just an everything sell-off for equity holders, at least. I don't know. I'm still, you know, in the last podcast, I said that I shifted my portfolio to gold, that I was giga bullish on gold. That seems to be playing out. Market seems to be terrified right now of, you know, holding equities, which I think is reasonable given the environment, but you know, there are pockets of opportunity. I don't know, Jonah, what are you seeing?
Yeah, I mean the gold is just ripping like an alternative crypto asset. Let's say it doesn't look like a $25 trillion asset. It's not pricing like that. It's pricing like a micro cap that's ripping in some sort of alt season, which is bizarre to see because, you know, gold will put in decades where it just does absolutely nothing or underperforms everything else. And then you get one of these. And like you said, you know, makes you think twice about the stability of global markets. And, you know, there's this acronym, it's called TINA. It stands for There Is No Alternative. And that acronym has historically applied to the S&P 500 because, you know, like institutional capital is just starving for places to park cash. It's their job. And frankly, there's really not a lot of options. So the S&P 500 has been this fantastic place to park capital for a very long time. So when it like sells off briefly and then does a quick V-shaped bounce, you know, allocators can feel okay about leaving their money in stocks, but this isn't a V-shaped recovery that's happening. It's starting to like bottom out. I don't know. We could talk about letters like L-shaped or U-shaped, or maybe it's just a friggin' bear market. Like you said, maybe the whole thing's, the bottom's about to fall out. So allocators are spooked. And since there is no alternative to equities, really, you know, they're searching for anything right now. And anything that disconnects to the upside, Avi, becomes an alternative in an environment like this. So gold started decoupling to the upside. You're not going to get fired for buying gold, right? So the fact that it decoupled to the upside created a momentum, a rally begat another rally, and so on and so forth. And gold has just started pushing higher. I think gold is previewing what's about to happen to Bitcoin because ultimately allocators are scared. Bitcoin is the only other, you know, you can't be like, maybe you, Avi, can be 100% in gold, but most institutions can't. So, you know, once you're maxed out on gold, what else do you diversify into that's sort of decorrelated from equities and gold? Like historically, Bitcoin's been correlated with equities, but now it's starting to not be.
And that's really meaningful.
That's been really amazing to see Bitcoin outperforming. So if you go to our favorite trusty chart of Bitcoin over NASDAQ,
I prefer IBIT SPY because they have the same close. Oh,
IBIT,
we could do IBIT
fine.
the Nasdaq
Do whatever you want. I like the Bitcoin chart just because I can see the history, but I do agree that now it's cleaner to use IBIT. Bitcoin over equities they're at the highs.
Yeah,
I mean that ratio is literally at an all-time high. It's the only time it was higher than it is today was one day, which was Monday, January 20th, which is when Trump got elected and Bitcoin put in that crazy candle, or Trump got sworn in, whatever. That was then we started trending down for a bit, and now we're back at the highs. I mean, the level of relative strength that Bitcoin is showing tells you a lot about what's going on. It tells you that Bitcoin is decoupling from equities because people are viewing this as a digital gold right now. I mean, I think in my mind, there are really only two reasons why Bitcoin is trading the way that it is. The first is that you still have idiosyncratic buyers like Saylor that are in the market, and that's keeping it up. But the second is people are done selling because of equities. Like whatever happens to equities at this point, unless there's a complete and total collapse, I think it would probably take another 10, 15% down in equities to trigger this. Bitcoin's doing just fine because the people that are selling on equity weakness and tariff worries and all that stuff about short-term liquidity hits and repositioning, they all got out when we had that massive flush down to 74. So now the people that are holding Bitcoin are kind of just in it now. And there's no real reason to sell. And there's allocation happening because of this new global dynamic that we've discussed at length in the last podcast, which is why I'm bullish gold. But just to reiterate, in a multipolar world, cross-border assets not tied to a state become a lot more valuable. Yeah. Right.
And by the way, gold,
the US dollar is devaluing right now against the rest of the world, which is kind of what Trump he wants that.
Euro dollar's 115. That's crazy. It was trading basically at parity a couple months ago.
But you understand that's really good for Trump because if the dollar weakens and Americans have to buy more goods from America, that's a good thing.
Yeah,
for Trump.
I mean,
and his tariffs.
Makes
American goods more competitive.
People are complaining.
He's all about that trade deficit, right?
Yeah, and trade deficits will go down if the currency goes down. So if that's his metric, he's getting what he wants. People are saying that the United States is trading like an emerging market right now. I don't know if I buy that, but yeah, let's not forget.
Is there anywhere that's not trading like an emerging market by that metric?
It's a great point. Honestly,
honestly, yes, it kind of is, but the whole world is.
Yeah, like maybe Switzerland is trading like a flight to safety market. But yeah, I mean, I just think we're entering uncharted waters. I still think that the beast that Trump created is one that he can control. Before we get to that, you brought up a really interesting feature, which is that Saylor has been buying all the way down. What was his average print? Like $84,000, $85,000?
Yeah, I mean, his average buy of all Bitcoin is now almost $70,000, which in my opinion is scary. I mean, this guy really needs to stop.
Yeah.
I think he really needs to just stop. Somebody should give Saylor a call and say, hey man, there's actually something called being too much of the market.
Yeah. I mean, he's gone a little bonkers. You've been, a vocal fan of his financial engineering. I guess technically, if the underlying business that he's got at MicroStrategy is enough to service his debt, then he's not going to get stopped out. But somehow these sorts of things always end badly. My gut feel like yours right now is a little bit uncomfortable. I don't like it either.
With that being said, one trade that if you're not on the institutional side, you're probably missing or you're just not paying attention to is that there are a lot of private placements going on right now for MicroStrategy competitors. And competitors not just in the US market, but in other markets. So I don't know if you've heard of MetaPlanet. Metaplanet is, Metaplanet is in Japan, and it is buying Bitcoin like a madman, kind of like MSTR. It is now the world's 10th largest corporate Bitcoin holder. They've stated they want to acquire 21,000 BTC by 2026, and the trade's been going nuts. I mean, these guys have done very well. I mean, their stock price has done very well, and there was a private placement, and people are up like 70x on that because they basically launched at a low, at basically flat premium, and now they're trading at a massive premium to NAV. Because I think everyone has looked at the MSTR model and they're starting to say, wait a second, there is a tremendous amount of appetite in the market for non-recourse leverage on Bitcoin. And that's really what I think MSTR is at the end of the day, is you buy it and it accumulates more Bitcoin over time. And hopefully the premium blows out because people think that it's going to keep accumulating Bitcoin and there's going to be even more demand for that non-recourse leverage. People are like, wait, why are we letting Saylor take all the money? Why don't we go launch our own versions of this? There's another one called Melius in Brazil. There's a Solana one that just launched, that just announced that they're launching. And I personally wouldn't be surprised to see a lot more of these projects go live, potentially, even at a much larger scale. I mean, most of these are between 50 million to 400 million. There could be a couple $1 billion ones launching because there's really no reason to let MicroStrategy like play this game alone. Like, why not? I think that's starting to happen, which is very bullish for Bitcoin. Very, very bullish. I have no take on the trades themselves, especially if you're buying them on the open market. I mean, I have no idea if you're going to make money, but a lot of these private placements, I think, are probably reasonably good trades. You just have to poke around to try to find them, and you got to be a big check, 1 to 5 million in them. But that's what's happening because people realize, like we've talked about, hey, this financial engineering from Saylor is pretty damn good. Maybe we should get a slice of the pie, and I think that's going to continue. I mean, you saw GME's doing it now. Basically, I'm bullish on Bitcoin, not just because decoupling from gold, blah blah blah, global macro. Like there's a genuine flow dynamic here that's helping Bitcoin out.
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Yeah, it's good you brought it up. I mean, there are whales in gold too, right? Like, who's the big whale in gold right now, and who started this whole rally? It's the PBOC, the People's Bank of China. They're divesting U.S. issued securities for obvious reasons, and to the whole point about Tina, there aren't many places you can go. Gold is one extremely viable place, And China, when it participates in commodities markets, including gold, understands that it has a lot of pricing power. When they stop buying, prices go down. When they continue buying, prices go up. So they probably know full well that they're just going to be pumping their own bags for the next 5 to 10 years as they divest from US securities and roll it into gold. So I'd say I feel a little more comfortable betting on the PBOC as a whale in a precious metals market than I do betting on Michael Saylor in the Bitcoin market. However, like Bitcoin is just at an earlier stage of where gold is at now, right? Like gold probably started on a lot of corporate balance sheets for thousands or maybe hundreds of years when it was basically the global reserve currency, and companies needed to stack it in order to transact and manage it in their treasuries. That's kind of what's happening with Bitcoin. A few forward-thinking companies are saying, "Hey, like this is the non-sovereign money of the future. Let me have some on my balance sheet. I can." I think if you're going to invest in one of these private placements, it's really just high grade or maybe high yield credit analysis. You have to be able to go into the credit, the issuer of these debt securities, and understand what their cash flows are. And if you're a seasoned financial analyst and you're good at this stuff, maybe you work in equity research or investment banking, or you have some background as a consultant, or you went to business school, you should be able to tell whether or not these companies are going to be able to service their debt obligations for the debt they raised to buy Bitcoin, and B, whether they're required to do so by covenants or not, and whether they can just take your money and rug you, or whether they're legally required to service their debt with cash flows from existing businesses. And if boxes A and B are checked, then you basically just have to. It just comes down to the valuation. Are you buying at a smart or a stupid valuation? And honestly, it feels a little bit Ponzi-ish, but then again, so is gold, right? Like ultimately, we talked about this maybe 50 episodes ago, but look no further than the money exhibit at the British Museum to see the nonsensical things that people have ascribed value to and means of exchange to over the centuries, right? Like why not Bitcoin? And I think ultimately, I think the real bull moment will come for Bitcoin when the asset class graduates beyond the Nayib Bukele's and the Michael Saylors and the these other sort of debt-fueled buying instruments out there, and graduates kind of into the world of like the US starts accumulating Bitcoin on the open market for a strategic reserve. The European Union starts buying Bitcoin on the open market for a strategic Bitcoin reserve, because it becomes clear that in a multipolar world, sovereigns are over allocated to the US dollar for global trade. And it feels like we're getting like, I would have thought that point would have been like, it would have come extremely gradually over 20 years, but it's starting to happen quite suddenly because of these tariffs. And in macro investing, you really have to watch for decouplings like this. Like this may be the first time that crypto has decoupled from stocks in a bear market since, is it ever?
What's interesting is that normally the way that crypto decouples is that it bottoms first, and then it sort of rallies out harder from the from the equity markets. Like the equity markets will go down a little bit more, maybe for like a few days to a week, and then they'll rebound. But Bitcoin's already rebounded at this point. That seems kind of not. That actually is not really what is happening right now.
Yeah.
Bitcoin bottomed on Monday, April 7th. That's the same day that NASDAQ bottomed. And then you had that massive move up when the tariffs were reversed from NASDAQ. And then NASDAQ started bleeding out again, but Bitcoin didn't. It kind of held, right? And that's a little bit of a different dynamic than what I was describing before, where you still have the straight line down in NASDAQ, but Bitcoin started to go up. This is Bitcoin showing relative strength, not bottoming first, if that makes sense. I think there's actually a distinction there, which is a much more powerful indicator.
Yeah, because then it's a hedge. Then it actually then for the trillion or tens of trillions of dollars worth of equity capital out there, Bitcoin, instead of just being like a correlated thing that moves first, becomes something that protects your equities. Nobody wants to sell their equities. We all believe in human innovation. We all believe in the American market, right? Like nobody actually wants to say, all right, this is it, end of the empire. It's over. It was a great experiment, but let's get bearish stocks until they go to zero. Nobody's going to make that bet because it's just been the worst bet ever and probably will be proven terrible again. We just don't know when it's going to bottom out. What the world is looking for is a hedge. And the second Bitcoin proves it's a hedge, oh my goodness, Avi, it's going to get silly. There's just not enough like gold is so much bigger than Bitcoin. Bitcoin could get silly if it becomes an institutional equities hedge.
I 100% agree with that. And the takeaway, because I want you guys to always think about trading and how to make money and not just pontificating about macro, is I think that means that the tails on Bitcoin are really underpriced right now. And if you want to, I don't trade options a ton because I only do it when I really have edge. But Bitcoin vols for the end of the year are sitting in the mid 50s, basically all the way up to 170K. I think that's a lift personally. Like I think and this probably.
What's the Dec 31st $170,000 strike call cost?
It's $3,000.
Ooh, that sounds cheap.
Right? That's kind of what I'm saying. Is like it's not. I mean, maybe I personally think
trade
that
idea.
this happens sooner rather than later. So it's kind of a now. It happens now, or it doesn't really happen. Like we get at least from this particular decoupling moment, we get a really big boost in the next two to 3 months. So really, I'd be looking at like 100K. I'd be looking at June 27th, 100K, and that you're looking at 3.5K. If it goes to 120K, I mean that's a solid 6x for you at a pretty.
Well, it's more because the vol would rip. If it went
I'm talking like at expiry, right? Like if at expiry,
terminal value, you would 6x.
I mean, I think you could probably make more if it obviously happens very quickly.
I think you would 6x your money if it hit 100K. Like I think let's say that in a month it's trading 100K. I think the vol would be so high that you would 6x your initial investment. That's my
agree with that.
Options trader intuition.
And that makes it, I think, a very attractive play in my mind, because people for some reason are not, and that vol is like 50 vol, which is just pretty damn low.
50 vol is, that's like somewhere between oil and natural gas, just to compare it to real world assets. Equity vol tends to be, I guess the VIX is trading.
What is it? That's pricing in a 2.6. Just did the quick math, pricing in a 2.6% move a day, which is pretty low.
Today it's spot on. Today we're up 2.5%.
Yeah, but VIX is at 34, man.
Yeah.
Like
what worries me about like getting bearish.
Bitcoin options are a really nice trade right now. If you want to express bullishness on BTC, I really love BTC options.
I agree with you. I'm not disagreeing with you, Avi. And I think that if BTC options are a little bit tough for you to access, or you feel uncomfortable trading on there, that was what I was about to say. Yeah, go and trade some IBIT calls. I think that's those are super liquid. Honestly, the way that I've been looking for my optionality is in alt beta. I think that some of these altcoins are. I think we may have a selective alt season if Bitcoin starts to rip. And I think certain assets will drastically outperform Bitcoin. Most alts won't, but I'm looking for a couple that will. And my heuristic, like basically, you and I talked about Hyperliquid on that awesome podcast we did with Felix on the lows. I bought some. And ever since I bought it, I've been kind of pacing around my office trying to defend or trying to poke holes in the idea that a project like Hyperliquid that takes 95+% of its fee profits and dividends them back to users in the form of token buybacks. I'm saying, like, I'm trying to understand why that's any worse than owning equity in a great company. And I haven't been able to. Like, basically, it's almost better than owning equity in a great company. It's like owning equity in a company that gives you that basically takes their net income every year and just dividends it out pro rata to the equity holders in a profit share style fashion. So it's like, I think fantastic businesses that are anti-fragile and benefit from volatility, like the best business in crypto is an exchange, and this exchange, like the token is linked to the project via buybacks. And if we get a crazy Bitcoin move, like let's say you're right, let's say we get a volatile move up past 100K, people will be trading their balls off on Hyperliquid and fees will go through the roof. And I think there's sort of like a reflexive buyback mechanism in there that will help pump your bags, in addition to just the general rising tide lifting all ships in crypto. So I think that, like, one way to play a rally is to buy IBIT calls or call spreads, probably just calls because the vol is low. Another way to play it is to take projects that are showing relative strength to Bitcoin right now for good reason, like Hype. Hung out with the chief last week. He Tau pilled me again.
Tao's looking good. Looks like
Tao's trading
like
like
some good.
Tao's trading Teflon. Like, I think that one might be a good one. Solana maybe. Honestly,
I mean, really, I'm looking at Pendle, Hype, and Tau.
Yeah,
those are. I think
you might get an option like move in those.
You know, short ETH, long these things, and just wait 6 months and be up 100%. I think it's the right trade. I mean, ETH again. I won't beat a dead horse. It's fucked.
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Back to options for a second. A great trader once told me, I spent most of my career trading options. That was my bread and butter. You're never supposed to buy options unless you expect the market to move fast, right? And it's very rare for markets to move fast. And usually they move fast to the downside because everybody's long and then there's a panic. Those panics are very difficult to predict. And so buying puts are expensive. Put skew always trades at a premium to call skew. It's kind of a loser's game. I don't like buying puts. I really like selectively buying calls in scenarios like this, where for once in a blue moon, both of us do expect the market to have a reasonable probability of moving fast to the upside. And that would be, again, just for everybody listening, it would move fast because of institutional investors piling into Bitcoin and sovereigns piling into Bitcoin as a hedge against their US equities. I think if it's going to happen, it's going to happen in the next 3 to 6 months, max.
Yeah, and this is basically I agree with you. I personally think that 88K, which is where we are right now, is just an unstable price.
Yep.
It just doesn't make sense for Bitcoin to hang out here. Either we are both completely off base, it's possible, and Bitcoin is just being supported by Saylor and like one other player. And once they're done, I mean, Saylor announced that he was done this morning, but once the other guy's done or whoever is buying is done, then it just collapses. Or there's a genuine repositioning happening here, which is more of the camp that I lie in, and there are genuine flows that are coming in, and Bitcoin is much higher very quickly.
Yes.
So but one way or the other. I mean, like one way to play this is maybe you buy some 74K puts and buy some 100K calls. I mean, if you were weak and a scaredy cat, you could do that. If you're strong like an ox, you could just buy the calls. But up to you.
I prefer not. I'm so allergic to buying options. I spent most of my life selling them. I think that theta is the silent killer. You shouldn't buy, bet on too many things happening at the same time. Vol's not that cheap. Like cheap vol in Bitcoin is like 30% or below.
Yeah, but I do think that the market's mispricing it right now.
To the upside, for sure.
To the upside, it's mispricing it. You could also buy some puts. You could buy some puts on ETH and some calls on BTC. That's another fun trade.
Yeah, that's smart. If I bought a strangle, I would be looking to actively, like, dynamically hedge the puts and leave the calls naked in the bottom drawer. Like, if the market shanked to the downside, I would be either buying delta or selling out of my puts and leaving the calls on.
Yeah, I think that's right. I mean, if you get like a, maybe the market will gift us with another run at, 80, 85 or something like that, or 83. We'll be able to scoop that. I was reasonably caught off guard just by like how little we moved while the equity markets were tanking and going all over the place. I mean, from Saturday, April 12th to Sunday, April 20th, we moved in like a $2,000 range on BTC. I can't say that was like a, expected. If you'd asked me on that Saturday, hey, is Bitcoin going to move in a $2,000 range for a week? I would have said, no, you're nuts.
Yeah.
But now we're we've broken out of that tiny little mini range, and I think that we're going to see some vol pretty soon.
Yeah,
like 5% day.
I was going to say, I think we both are kind of like wanting to talk in the same direction, which is about alts. I think if we do get a rally, I think that like this finally in crypto, this next rally will separate the wheat from the chaff when it comes to altcoins. I think that, last summer we had people investing in billions of different meme coins. Pump.fun was the only long-term beneficiary. Most other people probably lost money on it. I think this time what emerges from this cloud of crap is going to be Bitcoin and a very small handful of solid projects that will probably perform for the next few years. I think retail is finally tapped out of meme-like investing, and will finally buy into our thesis that you have to have some financial linkage between genuine project revenue, business revenues, and underlying tokenomics. What do you think about that? Like, is that?
I don't know, man. I think you're just stating what's already happened. I actually had a conversation earlier today where it struck me, we're done. Like the .com boom era of crypto is over.
Yeah.
This is the part where Amazon takes its lead and never gives it up in crypto. Where, I mean, I'm sorry to say it, but I think your alt seasons are over. They're just not coming back because everyone. Let's put it like this: ETH kind of took the wool out of everyone's eyes, and took off the shade where people realized, holy crap! If ETH can be a 7-year-long pump and dump, like shit. I mean, I really can't buy anything unless it makes money. unless it's an actually like useful product. And even if it makes money, I got to stay on top of it, because ETH made money for a bit and was deflationary for about 3.5 seconds. And then it stopped being deflationary and it stopped making a good amount of money. And it promptly basically went to zero. And I think this is really, this is shocking to a lot of people. I think crypto is going to stop being that casino in a sense. The only thing that brings it back is the world has to start feeling really wealthy again. And you kind of need like a COVID like dynamic where people just want to punt on things left and right, or you need GDP growth to be like 5% for some reason, and everyone's just feeling flush with cash, and the stock market's up 30%. But basically, until you see that already happening, I mean, and even then, I don't know.
Or you need $150,000 Bitcoin, and all the incels feel rich and start hyper gambling again. But yes, I take your point. I just have one issue with how you framed it. I would argue that I'm not describing what already happened. Like Sol BTC is 70% off the all-time highs, right? Like, and Solana's as legit a project as any in crypto. I think my point is that there will be a very selective altcoin season, limited to, let's say, 24 tokens or less, that comes during the next rally, where those tokens actually outperform Bitcoin. I'm not, both of us have been saying alt seasons are over, and yes, the .com boom is over, but I still don't think I'm describing a boom that's already occurred.
Yeah, the boom part, yeah, it hasn't occurred yet. But I guess what I was trying to articulate is just like we're in the process of the wheat being separated from the chaff right now. I mean,
yeah, it's just the chaff is going to zero and the wheat isn't, and the wheat's not rallying yet.
Yeah, and the wheat will rally. I mean, Hyperliquid did well since I told you to get in on it.
Good trade, man. Thank you for cluing me into that.
Gold and Hyperliquid. I should just retire now.
I mean, I think I'm going to start. I haven't sold any Hyperliquid. I think I'm probably going to take some profits around $20 a token.
Jonah. Don't even think about it.
Last episode, you were saying to think about it.
30.
Okay.
30. I'm not 20. 25 to 30. You can scale out of a little bit. We're too close to 20. Like we've spent 5 days in this 17, 18 range. I think that we punched through 20.
Have you used Hyperliquid?
I can neither confirm nor deny if I've used Hyperliquid.
Yeah, I can't confirm or deny either, but I've heard from folks who have that it's pretty friggin' amazing. The UX is slick.
It's great. It's great. I mean, honestly, it's just a top tier product all around, and I'm hoping that we find more.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets.
One thing that I've grown to appreciate, that if you're listening to this, if you're in crypto and you're trying to figure out this space, and this is not an ad. This is not an ad read at all.
We don't do those.
We don't do those. But you need to subscribe to research services like yesterday, because it's very difficult to do all of your own work. And basically, my entire day is spent reading research reports. I'll name them. Blockworks, obviously, they sponsor this podcast. We love you, Blockworks Research. But Messari and Delphi are also very good.
Messari is still good, even after the departure of our beloved leader, our dear leader.
Better.
Oh, wow.
But, you kind of need to be reading a lot and actually diving in. I mean, like you got to go on DeFi Llama basically every single day, and you have to talk to people that are in all the different ecosystems. I mean, the Tau thing is a great example of this. You know, if I didn't know chiefing and you didn't know chiefing, there's no way in hell I would know that DTAU is popping off, that people are actually using it, and that even though there's a ton of friction, it's growing. And there's TVL coming to the chain. Like, how would I know?
What's your favorite metric on DeFi Llama, by the way? I'll tell you mine. You tell me yours.
I mean, it depends on what I'm looking at, but I mean, I don't really look at TVL. I just look at fees, and I look at fees and unique users.
Fees is my favorite. 7-day fees is my favorite metric on DeFi Llama, because like I said before, this is your chance to disagree with my thesis, by the way. I think we're past the .com moment too. I think only real businesses will survive. And because it's all on chain, you literally have a dashboard telling you in as granular like format as you like how much money these businesses are making. Mm-hmm. And even Amazon stock didn't have that back in the day. They reported quarterly. So I just look at fees to see, like, it's like, okay, Tether, 7-day fees, $130 million. Like, no way to invest in that. Damn. Okay, Circle is next, can't invest. Pump next, can't invest. Jupiter next, questionable tokenomics, but that's cool.
I don't know, man. If Jupiter starts passing back revenue, the thing about fees that's kind of difficult is revenue and fees are different.
Yeah.
Right.
Let's look at revenue then.
Revenue for Jupiter is 240 million annualized, and fees are almost $1 billion because they have to pass back. Whenever you're looking at a DEX, you got to remember fees are also paid, like they're paid out to liquidity providers.
Yeah.
So, fees can give you the full picture, but for DEXs, they don't.
Well, for Hyperliquid, fees equal revenue because it's a cloud.
For Hyperliquid fee, for Hyperliquid, fees equal revenue.
Yeah.
For Jupiter, they don't. Because liquidity providers get
because it's an AMM. Yeah.
Correct. Now the revenue is still pretty good.
Hyperliquid, $7 million. So they're making $1 million a day. Freaking crazy. Obviously, Tron is up there too, but Hyperliquid is the 6th highest protocol when it comes to 7-day revenue in the world. Then it's above it. It's Axiom, Tron, Pump, Circle, and Tether. So basically, Hyperliquid is the most investable, and I think the price to earnings is still kind of in line with what you'd see in the NASDAQ, not what you'd see in like a mania style environment for tech. So it's probably okay here. Hyperliquid.
Yeah.
I love that metric.
It's that ratio is pretty solid. But I mean, go on DeFi Llama, go read research reports, try to find the things that are actually making money and performing well. I mean, like Curve I think is going to be a winner as well, just generally.
Yeah, I bear posted Curve, which is sometimes what I do when I'm undereducated on a protocol. I was like, they're not really doing enough to compensate their users. And then somebody replied to me like, what are you talking about? Look into their tokenomics, sent me all the white papers. And I did my research, and it does indeed seem like Curve is passing a lot back. The problem with Curve, so I was wrong. The problem with Curve is I just on this, they make 159. I'm just looking at this dashboard. Fees are $300,000 a day. Revenue is $159,000 a day. Like, not too shabby if you're just a couple of guys that created a protocol. But if you're trying to invest in the token, what's the FTV right now? Let's see here. Curve.
I just think that as stablecoins heat up, people move to Curve as a play.
Yeah, it was really useful during the last sort of 2022-23 crisis. TVL of Curve, sorry, not TVL, FDV of Curve is 1.3 billion. So 1.3, so $150,000 a day, or sorry, for 7 days times 52 weeks. That gets you to 7.8 million a year. So FDV 300 by 7.8. That's a, hold on, my cell in Excel can't show me that many digits. That's 167 PE. I'm not sure that's necessarily the greatest entry point, but who knows? I'm not an equity investor.
Maybe we need to pivot. Maybe we need to start hiring equity analysts to value crypto companies on the the way that equities were, because that is a direction we're headed.
Yeah.
The game has become a lot harder. If you're not getting good information from good sources and talking to the right people, it's basically impossible to make money now.
I wouldn't say impossible, but it's very hard. I mean,
in the alt world, it's pretty freaking hard.
Yeah, especially if you don't have a finance background. I guess the thing is markets never get easier, but crypto is still, relatively speaking, a lot easier than, say the US equity markets, where you're just going head to head with Ken Griffin on every trade. That's an uncomfortable place to be. Here, we're still kind of the rails aren't really there yet for the institutions to actively trade altcoins. And if you want to get even deeper into the weeds, let's just use, since we were talking about Tau and DTAU, let's just use Tau as an example. One layer removed from altcoin trading on liquid exchanges, liquid crypto exchanges, one level of sophistication below that is trading subnets on Tau, right? A tweet will come out about some subnet, Barry Silbert will pump one of the subnets in a tweet or an interview, and then it'll rally a couple hours later, and it'll rally a lot. And you have to have Tau to play that game. So obviously you can't really trade these versus dollars, but if you're inside of that ecosystem, it's even more inefficient. So, I can't say that I'm invested in Tau right now. I'm not. I've kind of wanted to enter last week, got lazy, and then now the price is pumped by 20%, and I feel a little bit worse about it. I'm just kind of still mulling it. But I think that if you want to actively click trade something that's quote unquote easy, you have to search for these ecosystems within ecosystems that are going to perform. And if you end up doing well there, you stack more Tau. And if Tau performs, then, the chief, to quote the chief, it's kind of like DeFi summer, stacking ETH using DeFi, just good trading on chain. You stack more ETH, and then ETH would rally and your returns would compound. So maybe there's some opportunities a few layers below the surface of the onion there. I'm just, spitballing here. Any other ecosystems you're looking at, Avi?
No, I need to start deep diving into a few. I need to do a refresh of the Solana ecosystem, see if anything is out there. I mean, if anyone listening it's one of those people that just got obsessed with a specific random niche ecosystem and knows everything about it, let us know.
Yeah.
Send us a DM on Twitter and just let us know what you're so interested in, and we'll cover it on the next podcast. I think that could be kind of fun.
Yeah.
To go find this podcast. We always offer ways to think of the market and trades, and right now the way to trade and make money is to go deep and then express it through pairs. We can talk all day about directionally trading macro and BTC, but also there are other ways to make money.
I mean, with the exception of this, of not having top ticked Bitcoin at 108, or I'm just speaking for myself here. Maybe you did, but with the exception of not having top ticked Bitcoin at 108, I'm pretty proud of our general macro long term analysis. We've had the call right since the lows, and we haven't really suggested that people stop out of their long-term core length, even on these pullbacks. And it's, this asset class is showing all the signs of performing versus the dollar over the long haul. And it already has performed versus equities. It's on the highs versus equities. So if you've been in Bitcoin, you've performed admirably versus your peers in the equity markets. So I'm actually, to give us a little bit of credit, I am quite proud of the way that we've foreseen this particular just Bitcoin's performance. Going forward, I have not lost any conviction in that macro thesis, but aside from just giving up on most meme coins and most altcoins, I do feel underprepared for like the micro analysis that allows you to replicate compounding returns in a DeFi summer, or maybe this next one is Tau. I don't know. So yeah, to all of our listeners, hit us up. We've got a Telegram room. It's it's called the Niger Delta Avengers. There are links to it in our Twitter bios. Follow the 1000x agents. It puts out pretty good daily recaps now.
You know what? Maybe I should just ask the 1000x agent.
Yeah.
I can't wait for this terminal to go live, guys. I mean, if you haven't been paying attention, Jonah mostly, but me sporadically, have been helping build this beautiful, beautiful terminal. And I think when it launches, people are going to be like, holy shit, I cannot believe that this thing, that they actually managed to launch something like this. Because it was kind of like a spare time little fuck around project that's now actually pretty useful and pretty serious. So keep an eye out. For all those listeners
should we
that haven't hopped in the chat yet?
Should we walk the listeners through like what it's going to do? Like the V1 is going to do?
Yeah, Jonah, give him the rundown. What's it going to do?
Okay, so here's the elevator pitch. A terminal is a place where you can interact with markets and get information. The Bloomberg terminal is the most famous terminal in the world. I used it for almost 2 decades. It requires you to be very proactive. You have to go in there with an idea of what you're searching for. You kind of have to say, I want to see this chart, or I want to compare these 2 assets, or I want to look for this particular type of news. You have to have that idea, and then you have to know the terminal language to communicate it to Bloomberg. Very powerful tool, tons of data, excellent product. What we're trying to build is a slightly more reactive terminal where you have 2 panes, a left panel, like a left pane and a right pane. The left pane is a feed of news articles, analysis that our sort of bot has gleaned, like it basically synthesis of views about different tokens that it updates throughout time and posts in the form of like, basically it's trained on our podcast to sound and think and act and express views like we do. So it's a combination of news, bot post synthesis of markets, and then previous chats you've had with our bot on the left pane. And then when you click on one of those sort of terminal news articles or posts, on the right, the text of that post or news will pop up. And unlike a traditional news story where you just read it and think whatever you want to think, this terminal will give the user the ability to talk to the article. And the bot will respond as if you were having a conversation with the 2 of us about the article. Like, for example, a user could say, hey, this article talks about Dogecoin. I'm long some Dogecoin. What does this mean for my position? And the bots might say, hey, not financial advice. This is actually pretty medium to long-term bearish. Your position, you should think about managing some risk here. And here's why. Here are 3 reasons. And it's basically like a way for you to talk to financial data in English and receive responses in English and chart format. So that's kind of what we're working towards. Avi describes it as the world's best crypto analyst. It's a product that both of us wanted ourselves, and it's cool that we can build it in our spare time with our awesome dev who has semi-doxed himself, not his name, but his Twitter handle online. So yeah, basically that's what we're going to be launching in the next couple of weeks. It's actually a lot more work than we originally expected, but in the age of AI, programming things is an order of we didn't need 50 people to build this. We needed just a couple people. So keep your eyes peeled for that.
It's I'm psyched. I mean, just as a user, I'm kind of psyched. Okay, and chill. We'll end it there. Sorry guys for badgering you. We're just really excited about this.
Yeah.
This is going to be good. This is going to be really fun.
Yeah, we didn't say buy the token. We said check out a project that we worked on where we can, help you. So it's less scammy than most shills. We genuinely want your feedback. So we'll be announcing it on the podcast when it goes live, and you can tell us if it's great or terrible.
Well, good stuff, man.
Likewise.
I will catch you in another week.
Yeah. See you next week. Who knows what's in store for us? This market's crazy.
I can tell you, BTC up, ETH down. That's all I'm saying.